All right, welcome back everybody. My name's Austin. For the first time in almost 3 years, Bitcoin has just hit over $17,000. We're starting to see more and more coverage from the mainstream media, picking up stories like this. But here's what the mainstream won't tell you, is that even though price-wise we are very similar to where we were those 3 years ago, fundamentally we are at a totally different place. History is repeating in terms of price action for Bitcoin, but the fundamentals have never been stronger. Let me share with you a series of charts, comparisons, and on-chain data showing you that as a Bitcoin investor, this time around, history is going to be a little bit different. Like always, check the timestamps down below in the description, and let's jump in. And first question, investing in Bitcoin today, are you too late to the party? To answer that question, let's look at reserve risk. The metric reserve risk is defined by Bitcoin's current price over the HODL bank. So it is used to assess the confidence of long-term hodlers relative to the price of the native coin at any given point in time. So it's an open public blockchain. But just to define HODL bank, how is that measured? The HODL bank represents the opportunity cost of holding an asset. So each day a coin is held, the owner defers the ability to exchange it for its cash value. This deferred spending represents the confidence of hodlers. HODL bank is the sum of these cumulative daily values. So we can see how strong the hodlers are and then use that, basing it off the current price, determine the reserve risk, which would tell us confidence of the current investors in the market. When confidence is high and price is low, well, that's an attractive risk versus reward to invest, and that's when reserve risk is low. When confidence is low and price is high, well, then risk reward is unattractive at that time. That's when risk reserve is high. So we want a low reserve risk. And based on the data, to answer that question, no. At current prices, you are not too late to the party. Many on-chain indicators show that the bull market is only getting started. With Bitcoin in the 16 to 17K range, reserve risk is just breaking out of the green zone and even lower than 2019 when BTC hit 13K. Let's look. The black line represents Bitcoin's price history. The orange line represents Bitcoin's reserve risk at the time, which is again the amount of people hodling we can see on the blockchain, then comparing that to current price. And what this means to you today, even though with the Bitcoin price just hit over 17K, the reserve risk is equivalent to where we were when we first started 2017. That's the risk reward profile we're at right now with Bitcoin. Let's keep going. Let's look at Bitcoin net transfer volume out from or into exchanges. This is a metric we've shared with you a few times, but we are in such a different place than where we were 3 years ago, despite the price now still being at 17K. Previous Bitcoin price peaks have coincided with Bitcoin flows into exchanges. That's the green. People want to sell their Bitcoin. While this ongoing rally is occurring in an unprecedented period of net withdrawals from exchanges. We are in the midst of a chaotic Bitcoin era. Check this out. All this data can be verified via Glassnode, but we can see on the run up to 2017, coins more and more started to enter exchanges. We couldn't be in a more different place this time around. Nobody is interested in selling right now at current prices. This should speak volumes to you. And let's go further. Let's dig deeper and find the ratio between miner sell pressure towards the exchanges and what's being scooped off. Since about a month ago, when Bitcoin was at 11.4 thousand, miners have been selling an average of 11 Bitcoin per hour at exchanges. In comparison, 214 Bitcoin per hour have been scooped off exchanges. This is a net positive, net flows of buyers over sellers. And putting it all together, this week's average is a net positive of 328 BTC per hour leaving exchanges. Hit the like button right now, hit the like button, support. And as we get new data, as we keep watching the Bitcoin price, I will keep you updated. What do you think about this? Seriously, what do you think? Share your opinion down below, and let's keep going. Next piece of news, Ethereum's top 10 Dapps reach over 1 million daily users. So if you're wondering which coins, DeFi coins right now, have the most activity, we can look at Dapp Radar's report. This takes into account the last 30 days, and the big takeaway for me is 3 Dapps account for 90% of user activity, and they're using daily active wallets as the metric here. So it's Crypto.com, Compound, and Uniswap lead the charge, accounting for 90% of the daily active wallets. And it's Crypto.com who is pulling out ahead with almost 500,000 daily active wallets in just the last 30 days. So it appears that is where the people are going. We can see Crypto.com, Uniswap, Compound. Hex having a lot of activity this month. Also Axie Infinity, Wrapped BTC, and then of course the NFTs. Well, I guess just one NFT, Rarible, then Synthetics, then DYDX. Interesting to see where the money's flowing. Very interesting. Hey, by the way, before I forget, I've seen so many impersonators, scammers, spam accounts in the comments. Just know that this account will never reach out to you and ask for you to invest money or any scammy thing like that. Our account always has a check mark in the comments next to it. Do not be fooled by imposters, and just watch out for bots down below in the comments. It's crazy out there. But next piece of news. Game of Thrones' Macy Williams asks Twitter about Bitcoin. So check this out. Macy tweeted a little poll yesterday. Should I go long on Bitcoin? And surprisingly, her fans, 53% of the people said no, don't do it. And they would have been wrong. Bitcoin ended up going up in price since yesterday. Macy, if you're watching, comment below. Let us know what you did. Okay, next piece of data for you. Question. In the year 2020, which coins are the most distributed? Or in the last 4 years, which coins are trending towards more distributed? Well, obviously, this doesn't take into account any of the new coins. Those would be the most centralized as companies launch those coins. They often keep a large supply for themselves. BTC has the highest NDF, network distribution factor, followed by, interestingly enough, Decred, Litecoin, and ETH. So in the green, we see Decred getting more distributed. ETH, over the last 4 years, getting more distributed slightly. But takeaway is Bitcoin is the most distributed, followed by Decred, and then Litecoin and ETH. Does this change anything about your thoughts on those coins? Let me know. Next piece of quick news, an update on the BCash Hardfork. Here is what happened. As you know, on Sunday, the BCash blockchain was split into 2 competing networks, the Bitcoin Cash node. I think this is just like the one we all know, and then Bitcoin Cash ABC BCHA, which wanted an increased 8% tax on the miners to a single development team. Well, the results are in, and although 2 chains were created for a while, the taxman was sent home. It just kept losing hash power, and the BCH that we know won out. So it was contentious. 2 coins were created. Nothing has really changed for BCash, and as Roger Ver commented, at this point, I don't think it's even fair to call it a fork. It was a free airdrop of ABC coin to all existing BCH holders. Yeah, I guess, if people wanted to be free airdropped complete shit. So, I'll keep you updated. Next piece of news, Uniswap on some shaky ground right now. Uniswap's liquidity plunges 40% in a day as their incentives dry up. So liquidity providers are no longer receiving daily Uniswap coin incentives, and that was baked into the governance. It lasted till today, and now 40% of locked up coins have left. Meanwhile, vampire clone SushiSwap has doubled its total value locked and is aggressively pursuing additional liquidity. So, what is Uniswap now doing about it? Well, following the sharp decline in Uniswap's liquidity, token holders have embarked on the process of voting for a new governance proposal that seeks to reinstate rewards in the form of Uni tokens for liquidity providers. Honestly, they should have done this before today's date, but they couldn't agree on anything. Well, this new proposal cuts the amount of Uni rewards in half compared to the former program, And while 2.5 million Uni tokens were previously distributed to the liquidity providers of Uniswap's wrapped BTC ETH, USDC ETH, USDT ETH, and DAI ETH pools each month, the new one, instead of 2.5, is now 1.25 million. And just for the next 2 months, if this gets approved. So we'll see. Will Uniswap continue to be the best game in town? As, look at SushiSwap totally switching things up. They're saying, hey, they don't have the rewards right now. We want the liquidity. Come to us. DEX SushiSwap, the same day that that proposal was submitted, unveiled new incentives for providing liquidity to the 4 pairings Uniswap had stopped providing incentives for. So we will see. Okay, that is the video. My name's Austin. See you tomorrow.